On today's episode of the Investing Revolution, we're going to talk about real estate syndication with our guest, AJ Shepard.
This is the Investing Revolution, a podcast designed to help your real estate investment strategy. On this podcast, we'll teach you the actionable steps to take and pitfalls to avoid so that your real estate investing can thrive.
Welcome to the Investing Revolution. I am your host, Jonathan Cook, and with me is Christine Bennett.
Hi guys, we are actually filming from Las Vegas today. We're at PMMCon 2022 and we have a really exciting guest today.
It's AJ Shepard, guys. How are you, AJ?
I'm wonderful. Thanks for having me.
So, AJ, you are from Portland, Oregon.
Yep.
You operate a syndication platform for real estate investment, and you have a podcast yourself called the Westside Investors Network.
Westside Investors Network, WIN for short.
Yeah, I have a WIN coffee mug that I send you pictures on LinkedIn occasionally.
I appreciate that.
Drinking my coffee out of my WIN mug. Why don't you go ahead and tell us just a little bit of your background in this industry, what got you into syndications, because that's what we're going to talk about today, guys. We're going to talk about real estate syndication. So walk me through your process of getting into real estate investing and then into syndication.
Sure, you bet. So I'm going to start off with investing. Like we started buying houses in 2007, 2008, all the way through the downturn. Around 2014, 2015, we started getting more into multifamily. And it wasn't until about 2019, we were in the throes of a 8-plex renovation. And it just started taking a little bit longer to get our money out with refinances and the repairs that needed to be made. And multiple deals came across my desk. And I was like, this is super unfortunate that I can't capitalize on these deals, even though they're on my desk and I know that they're going to be good. So we then started searching out for a way to do that. And we found syndication. And syndication allows for us to pool more of other people's money, investors' money together and buy larger projects. So from there, we've scaled tremendously just in the last 2 to 3 years.
Okay. So I think a lot of our listenership, most of our listeners are real estate investors themselves. So I know that they see these pain points to where, I've got my one really good deal here and they operate it. Maybe they've done a BRRRR strategy. Maybe they've done some cash flow strategy, whatever they're doing. They've operated that. They've gotten through that point. And then of course, deals never stop, right? Yeah. They're always coming across and it's like, how do you take that? How do you take this opportunity and be a part of it always, right? That's always the question is where do I go to get more? Because I know how to operate this and I know how to make this work.
And that was our pain point. And, fixing the pain point for the investor of, not if they get into a BRRRR strategy, like maybe they're managing it themselves or they're using a property manager, but they got to go talk to another broker. Like there's a plethora of a lot of different people that they have to talk to. Yep. Whereas with syndication, we are providing that and it's a much more passive income for the investor, which is exciting. It kind of fixes a pain point for both parties.
Yeah. And so we haven't taken a deep dive yet on our podcast into the multifamily space, but I think a lot of our listenership and people that interact with me back and forth on some of our Facebook groups are hungry for multifamily investment knowledge. And I really wanted an expert to give some insights into not only, I think we all know why it makes a lot of sense. More doors, one property, one roof, one fountain. It makes a lot of sense.
Easily to scale. One of the really nice things about when you get into multifamily is it was built for that purpose. Yeah. Like you get into single family homes and sometimes, a previous owner has done like an addition and the contracting wasn't that good or there's just so many unknowns. Whereas with the multifamily arena, it is built for that and it's built for that type of property, which is exciting.
I know the reason I think AJ kind of makes it easy and approachable is because you've come from a place where you were doing your own kind of single investments and then you said, hey, these are on my desk, let me figure out a way to get them and get them done. And I really like the way that you put that. And I think that it's important for our listeners to understand that, he started doing the ones and the twos and that sort of thing, and then transitioned into multifamily. And correct me if I'm wrong, I think most of your projects are small multifamily.
Yeah, I mean, smaller in the sense, the last couple of projects we did were 20 and 30 units.
Yes, and that's we absolutely accommodate that kind of investor right now,
for sure.
And that's the thing is that, as you grow and you decide what strategy you're doing now and what you want to transition to, syndications are a fantastic option, and they're very attainable. And
Yeah. Well, and I think the cool thing that I want to get to with the syndication, because people have seen this word. It slides across some of these, Facebook groups and some of these LinkedIn pages. People talk about them. I don't know if everybody fully understands how syndication works. Can you actually give like a real quick nutshell version of how syndication works and what you need to make one operate?
Sure. So syndication in kind of its general aspect is pooling investors' money together and purchasing an asset. Now, through a LLC or a company, they subscribe as a securities, or you sell shares in that security, and that is how they get into the syndication, essentially. So typically you'll have two classes: a general partner, which is the manager or sponsor, the person really making decisions. And that's one of the beautiful things about syndication is like you pick your sponsor and you know that they're professional. They've been managing property for a long time. They know the market. And that's like really the huge benefit is you're investing alongside a professional.
You're investing not just on the property, but with someone that knows what they're doing. You're investing with a sponsor.
Yep.
So when you read a lot about syndication, the sponsor is the one that is taking the reins of the project, whether that project is a 20-unit multifamily or whatever it could be. The sponsor is handling the work. And then on the backside, it's the investors just funding the project. Is that correct?
Yeah, and so the LPs, limited partners, investors will come in the beginning, bring the money to the table, and then at the end, when everything is all said and done, you sell the property, they make a very large return.
So if I can jump in here real quick, I know that when I first started exploring this concept and exploring how I wanted to get started with it, I went to my attorney and I went to my tax professional, and they're like, oh no, you're selling shares and all these things. And if you could, I know you're not a tax professional or an attorney, but if you can kind of explain the difference between, just needing a Series 6 or 7 and...
Well, you can also go into like the difference between a fund and a REIT.
Exactly.
And a
you
syndication.
Can just touch on that.
Yeah, so a REIT is going to be usually publicly traded. Sometimes you have privately traded ones. Typically, the SEC has Regulation D, specifically 506B and 506C is typically what our syndications fall under. And with a 506B, you can have up to 35 people into it and raise up to $5 million. And the people investing only need to be a known quantity to the syndicator or sponsor. If you go with 506C, you can have as many people as you want, but the qualification is that whoever's investing needs to be qualified as a accredited investor, and there needs to be some paperwork associated with that and some verification.
Okay, that's actually pretty interesting.
Yeah,
that gets into kind of some options here with how you want to build out the syndication, which is pretty cool. So when you're looking at an investor that you want to join your syndication, what does that look like for you? Do you go out and find individual investors and say, hey, I have the syndication option for you? It's slightly different than you going ahead and tackling this multifamily yourself, because a lot of our investors that listen to us, they can tackle a single family. That's something that seems easier to swallow, right? Like you can, it's one house, it's 3 bedrooms, it's 2 bath. I know how to do this. But okay, here's a 20-unit multifamily, and it's maybe the price point is just, it's more than they are going to be able to take down on their own. It goes from $150,000 to, well, this one's closer to like $2 million. I can see the return of that makes a lot of sense, but I don't know if I can be a part of that. How do you go out and find the investors that are like, yes, this is the operator that I want to, partner with and do this?
Well, I'm not going to lie. It's being on podcasts like this and letting people know that you're in this space and doing that. I welcome any conversations with specific investors, and like really it's finding out their goals. Like what is it that they really want? Like I think we just listened to another seminar here, and it was like, most investors are looking for freedom, or they're looking for memories. They're looking for a way that they don't have to work, but they're still going to get a return because they've worked really hard for the money that they've got. And they want this passive income, and knowing that it's not at risk, knowing that it's in a tangible asset, knowing that it's in something that's going to perform very well and is super conservative.
Yeah. Well, Christine, I know you do a lot of underwriting for single family and building out some investment strategies for our clients. You handle tons of that. When we talk about underwriting for multifamily, like how much of that is similar?
So again, I think this is why it's really important to align yourself with people who know how to do it and who are confident in their abilities. So, that's why clients come to us for management, because we know how to do it. And that's the biggest part of managing and operating the ins and outs of the actual property is what nobody wants to do. We're really good at doing the dirty work, but then you scale that. So then, we're out here learning and growing and educating ourselves, and then aligning ourselves with somebody who can teach us something as well. So, that's why we wanted AJ. We were like, hey, he's already gotten his feet wet with this, and he knows, he also owns a management company. So it just makes sense. Also, it makes our network stronger. So when you're asking, investors who are, maybe on the West Coast or East Coast where we are, we have a network of people who want to invest in different areas all the time. So it's just kind of putting everyone together and making it happen.
A lot of investors are looking for diversification, and whether that's in different types of assets or even in different types of markets. So I think Christine hit very much on that. Is people are looking not only for the same thing all the time, but some different types.
Yeah. When we're looking at the diversification concept here, I think, I see this a lot of people that might be a great investor on a single family platform themselves. We have clients that are like this, that are great landlords for a single family property. And it kind of goes back to what we were talking about with ethical landlords a couple weeks back. They're doing the maintenance, they're handling the operation, they're doing the things that they're supposed to do. But then they get in their head, I want to diversify, and multifamily of course makes sense, because of course it does. And then they don't have the money to fully pull this off on their own. And that's kind of the beauty of the syndication, is that it's not just one person's pool of money that maybe they can run out. It gets to be this group of like-minded individuals putting their trust in a sponsor or a GP that's really going to take that and make it maximize the potential returns, right?
So going back to your original question, is how easily does it translate? And I think it translates very easily. So, we've rolled out our program at Revolution where we're able to leverage the receivables, and we can actually pay the rents for the entire year up front, which is a really great program for owners. But I think what they're going to see as well is they can then take those funds and throw them into something like a syndication, and just grow their portfolio from there. So they're serving both purposes. They have the long-term buy and hold, and then now they also maybe have a cash flowing property, and they have some tax shelter, which is...
That's pretty great, actually.
Yeah. I think that's how easily it does translate. It's very attainable. It's not something that the big words, which I know that we talk about all the time, big words, big concept, but let's break it down and we can kind of get there together.
The one concept that you've kind of touched on there that I want to elaborate more on is leverage. Like the ability to leverage in syndications is just as much as it is in regular single family homes. Like we are still getting loans up 75, 80% LTV, and which, for every dollar that an investor puts in, they're actually getting action on $4 to $5 total. So you just don't see that type of investment in the stock market. Like if you were to take out margin, it's 1-to-1 and a huge percentage. And the beautiful thing about real estate is you get to leverage those dollars.
Yeah, you do. Okay, so let's talk about leveraging but also planning for the future with that. Let's talk about building pro formas on top of, you've got your leverage, so now you have your return is nice. How do you plan for the future with it? How do you project out what you think those returns are going to be continuously? What does that look like? Because that's always, crystal ball magic is what it sounds like.
For every syndication that we do, we are very knowledgeable in our market.
Okay.
And that is one of the key things. If you're investing alongside a professional, they manage multiple properties in that market. They know what the rent's going to be. They know what it's going to sell for. They know what it takes to fix it up. Like, all of those things are known quantities to the sponsor or person that you're investing with, or it should be. Like, that's why it's really important to know who that you're investing with. Like, I've heard multiple deals or whatnot. You can have a good deal and a bad sponsor, and it's never going to be a good deal.
Yeah.
But if you have a bad deal or something that's okay and you have a good sponsor, that can be a great deal.
Yeah.
So it's really about that performance and being alongside that professional.
So is the professional in your mind? I know you're the professional doing a lot of yours as well. But if you were looking outside of your market, let's say you wanted to invest in a syndication in, I don't know, Atlanta, Georgia, for instance. What a coincidence. Or Orlando. Also, again, what a coincidence. So what are you looking for when you're deciding if you are going to be investing in a syndication yourself? What is the target indicators, or what are the KPIs? What are the indicators that make you go, this person knows what they're talking about, and I can trust an investment in their hands?
In real estate, it inherently has some risk to it.
Yep.
So it's really placing my trust in that operator. So interviewing that operator, making sure that they have really good assumptions in their pro forma. I'm always a big fan of trust but verify. So whatever information is being told to me, I'm still going to go out and just make sure to check it a little bit. But also, follow up, get references, talk to other people that they've worked with, make sure that they're a stable company that's not going to be a fly-by-night, do one deal and be out. You want them to be around and around for a long time. This is most people's nest egg, or their investment. It's their future, and so you have to take really good care with that. And I think it starts with vetting that sponsor and vetting who's going to be handling the money and essentially the asset.
Okay. Last question. Before I actually want you to talk a little bit about your podcast as well. So, for limited partners that are investing in a syndication,
yep.
How long is someone tied to that? I've read different options, and I know it's contractually based, correct? What is the time frame on it? How quickly can they, if they wanted to pull out of a syndication? Is that possible?
There is a lot of different operators out there. I am amongst a lot of different people that are doing this, and it really is just determined by the sponsor. So ultimately the sponsor is the one making the decisions on the property. They're making the decision on whether it's a good idea to fix the unit up or to just turn it and rent it. It's their decision on what time is it going to sell.
Okay.
So when you're developing the deal, you want to have an idea in mind, maybe not the perfect situation, and nothing ever goes as perfectly planned, right? We all know that. But what you want to do is you want to have confidence that that sponsor is going to make the best decision for the investor. And, if it makes more sense to do the value add plan and sell it sooner and realize a bunch of returns quickly, then that can happen. Or if you really are looking for someone that's I don't want to get my money back for another 15 years. There are people out there that do different types of investments. And we actually do some that are kind of around the 5-year mark, and then some around the 15-year mark.
Oh, that's pretty cool.
So I know for the listener that seems like a lot of trust and a lot of commitment, but these are things that you do know generally up front when you're syndicating or you're deciding that this is where you want to put your money. You discuss those things and you have kind of the base plan, and then obviously sometimes you have to pivot and go to plan B, but that's the beauty of having a tangible asset. I know we've seen a dip in crypto, and there's a lot of investors here, and it's just kind of funny. They're like, well,
talk about NFTs, how fun that
was. We won't go into all of it, but
I think I talked about that yesterday, but oh Lord.
The point is that it's a tangible asset, so you can always plan B is a lot easier than your crypto is now worth X. So
Most of the time, we are investing in very conservative assets. Syndication can be applied to multiple different types of real estate. Our niche is really in the small multifamily realm. When we buy an asset, it is 95% occupied, and we plan on keeping it that way unless we're doing some small renovations here or there. But like, it cash flows from day one. I mean, all of the stuff that we do, we have some sort of waterfall structure, and we're dispersing distributions to our investors every quarter.
That's pretty cool, actually. Oh man, that's pretty.
We're really
pretty great.
excited. We're really excited to syndicate in the markets that we're
I just
in.
became momentarily speechless. It's very exciting for me. I want to give you a space to talk about Westside Investors Network. I love your podcast.
Awesome.
I've been on your podcast.
You have. It's been great. Yeah.
I want you to walk through kind of your history into that, and what made you decide, you know what, we got to do a podcast.
Honestly, the podcast has provided us opportunities to get in rooms that I don't know that I would ever have gotten into. We've interviewed some great authors on our podcast. I've interviewed some other syndicators that have been in the space for 15, 20 years. Like, some of these guys have been through the real estate crash, which, I mean, I honestly just got started investing like at the bottom of the crash. So I've been very lucky. I've seen like a very upwards trend, but getting the ideas and the experience from these other people that have been through it just provides us with just a great education.
Yeah.
And that's really been the main reason. And honestly, it's like, if we're going to have those conversations, I might as well record them and publish them and let other people learn from like what we're trying to learn.
Yeah. And absolutely fantastic. You can be found on iTunes and Stitcher and kind of all
podcast platforms. Westside Investors
Network.
Yep.
So make sure that you actually download and subscribe his. It's fantastic. And again, I want to thank everyone for joining us today. Make sure that you like and subscribe with us as well, and visit us again in 2 weeks for our next episode. Thank you all so much.
Thank you.
Thank you, AJ.